Hey, this is Chris Goff, and in this training video, we're going to teach you how to lease option it with the seller and then use multiple different exit strategies to get rid of it, either by selling it, by renting it, or doing probably one of the most common techniques is lease optioning it back out. Another name for this would be a sandwich lease option. So let's jump in and check it out. I'm going to teach you how to lease option it from the seller and turn around and sell it. I would say it's probably my first choice to go sell these properties, but you can analyze it and you can surely do it. All right, if we scroll down, if you've seen some of the other lease option training videos in REALPro, you're going to see I'm going to keep these numbers the same, and I do have some explanations of these numbers in the other videos. But sales price, we're going to offer the seller $330. Again, it's worth more, but the home did need repairs. But it's livable. It's just needs updating. Maybe, change the color on the walls, things of that nature. We're going to put down $2,000 to secure this deal. Monthly rental payment of $1,700. We're going to do this for 36 months. Now, I could sell this property technically. I could turn around the very next day, put a for sale by owner sign, and actually sell it. Now, it's going to cost me some money to do this because I have $2,000 down, plus I have to make $1,700 a month payments until the property sells. So keep that in mind. Generally, you could just lease option this property, but you could sell it technically. So we're going to analyze it. Now, estimated asking price will be $375. Again, it's a good deal from the ARV because the home does need some updates. Estimated months to sell. Now, this is the question, right? Now, a lot of times when I sign a lease option agreement, I'll give you a great tip here. I won't commence it, so it won't actually start for 30 or 45 days after that. So it's not like I'm giving them $2,000 up front and $1,700 a month today. If I could turn around and sell this property within 30 days before it actually has to commence, technically, I'd save all that money. So you could actually structure that with the seller to enable you not to have any months to sell. Now, if it did take longer than that, then of course you would have to put the $2,000 down. You'd have to make the $1,700 a month payment, and then hopefully you sell it the next 30 days, right? So otherwise you're going to have another $1,700 a month payment coming in. So you do have to think about those things. But like I said, I wouldn't say that this would be common to turn around and do this. All I'm saying is you can. Okay, and that's what we're analyzing. Marketing cost, I'll throw in $500 to put a sign and flyers and things of that nature. I might do an open house and take the time to do that. Monthly holding costs, there really wouldn't be any unless you had to start making those $1,700 a month payments, right? And then selling costs. Now, here's a really good question is, well, what happens if a realtor is representing the buyer? Who actually pays the commission? Well, technically you would, not the seller. So it would have to come out of your proceeds. So I'm going to come back to that. Estimated repair cost. At the end of the day, we're selling it as is. So I'm going to leave that line blank. Now, if you come down here, you see the total net profit is really good. But if there is a realtor that comes in and maybe they, charge 3%, that's going to be coming out of your pocket. Okay, so that's going to be just additional cost. That's really going to lower your profit there. So just keep that in mind when you're working this particular strategy this way. Technically, you can do it. It's just probably wouldn't be the most common because as you can see, if you can't sell it, then you're going to have problems. It's going to cost you money. So anyways, hope these tips helped. I want to teach you how to lease option a property and then rent it out as your exit strategy. Probably not one of my favorite ways to do this, and you're going to see why. Why would we rent this? The only reason I would ever do a lease option and rent it is if something was happening in the area. Something's coming in that's going to explode the market in that area and you just needed to get in. That would probably be the only way to do this because number one, I've got to come up with $2,000 out of my pocket and I'm not really getting it over here. I'm just getting a security deposit when I rent it out. So it is costing me some money to do this, but let's see how the numbers actually work out. So how many months are you going to keep it as a rental? Maybe we'll only keep it for 12 months. And like I said, maybe something big is coming into town that's going to increase the value of the property. I'm going to receive $2,000 a month as going rent at 10% vacancy rate. You just never know. So I always like to throw that in there. Now, monthly operating expenses really is going to be zero because we're not paying that over with the seller. The seller still owns the property. Okay, so we're not really experiencing those expenses as if we own the property via seller finance or if you bought it. Now, if we scroll down to actually see the return, total cash flow for the entire year was only $1,200. Keep in mind, we had expenses up front of $2,000, cash on cash 60%. Yeah, you could say like you made money with the $2,000 you have invested. This really wouldn't be a great exit strategy, but I want to share with you, you could do this. It is an option.
And just think about it. You could technically rent it out for another year if the market hasn't actually increased. You could also just do a lease option at that point. So if the ARV has increased over the year and you could see that trend, or maybe a year from now, it's really going to be good. Now you could justify a much higher price. Or you could simply just sell it. So you have multiple different options even after the first 12 months.
We're going to talk about how to lease option it from the seller to lease optioning it with the new buyer. And if you've seen some of the other previous training videos with the other strategies, you're going to see how this offer actually is going to be a little bit different. And keep in mind, this is the same property that needs some repairs, but then we turn around and we say, okay, how are we going to sell this? Now, you do have the ability to stay in the middle or not stay in the middle. See, with a lease option, I could find the seller, find the buyer, connect the two dots, collect a little bit of money through the down payment and move on to the next deal. And then that agreement would be between those two parties. Most of the time, you're going to stay in the middle. It's just, anytime you can profit three different ways on a house you don't own, have no money invested in, I mean, that's a good deal. I mean, it's one of the only strategies I think out there that you don't have to invest any money to get a return. I know it sounds absolutely crazy, and if you're new to lease options, I would definitely encourage you to go to our education center and go through some of the training videos that we have on this subject. So we're going to sell this property for a little bit more. Now keep in mind, it's worth $415 if you looked at some of the other videos, but we're selling it at a discount because keep in mind the property does need some updates. Okay, we just happen to get a really good deal over here. So $375. Now, option payment, I would like $12,500 down. I think that's a fairly reasonable number. If I were seller financing it, which I couldn't because I don't own it over here with the seller, is I could get more. With a lease option, you're going to get a little bit less down. Monthly rental payment is $2,000, and that's what the going rent rate is for this property. But I'm only going to go 12 months on with this buyer. Now, although I'm going 3 years with the seller, this gives me an opportunity to say, hey, if the buyer does not buy, I could extend it another year because I'll have 2 more years left. I could find somebody new for the property and make another $12,500 down. Okay, so I could rent the property. I could sell the property. And the great thing is you have multiple different options if that were to happen. Now, of course, we want the buyer to buy. That's the whole point. And that's why I like to have my buyers get with a local mortgage broker so they can help them during these 12 months to get qualified. Sometimes just a very small number. Could be just some small debt to income ratio, a credit card that needs to be paid down. Many different reasons why people can't get qualified. Doesn't mean that it takes forever to change your credit score. You just have to be doing the right things. And that's where a mortgage broker is going to come into play. If I come down and look at the total analysis of this property, I mean, $48,000 on a house I don't own. I don't have no money invested in it. I mean, that's pretty huge. So this strategy is a great strategy to learn. If you're not familiar with it, definitely go check out the educational videos in the education center. I can then print this, obviously save this analysis, and compare it to other ways to analyze this particular deal. Hope those tips helped and look forward to seeing you on the next training video.